Gautam Shah is founder of Goldilocks Global Research. He's with us now. Gautam, good morning. Great to have you with us here. Thank you very much for joining us. I'm not sure, were we stock when we were in the midst of this 1,000-point move, Gautam? Or I think we spoke before, right? So how do you assess prospects now? Still in a range, at the cusp of a bigger move, or back down once again from the upper end? What's your sense?
Good morning, Prashant. Well, I think we spoke at the starting of this 1,000-point move, and it was a time wherein we were going through the perfect storm with just about everything against the Indian market rally. But the way markets have reacted to the Trump tariffs and all other negatives that we have been dealing with, I think is quite commendable. And it is fair to say that domestic liquidity has won over once again. People still question valuations. People still question, whether our markets are good enough to actually scale back to previous highs, because most other markets in the world are actually trading at lifetime highs and beyond. But I think I'm quite encouraged with what has happened in the last 2 weeks. I think the screen has looked good. It's been very vibrant. There is widespread participation. A lot of stocks which were underperforming for a long period of time have come back really well. And I think what's happened in the last few days is just a cool off after that 1,000-point rally. So 25,070 and then 24,900 in my book would be the first supports. I think this market is now a buy on dip. And from around these support levels, we should possibly see a turn, taking the Nifty back to 25,500, which I think is now the key level. And once we are past 25,500, I think we should be preparing ourselves for lifetime highs. So I think the setup looks pretty good. Stay in the right pockets, stay in the right stocks. Don't look at the Nifty too much, and I think we should be sorted.
Don't look at the Nifty too much. Actually, yeah, I mean, the Nifty did manage to climb above 25,000. So maybe higher levels ahead. Got that point, Gautam. So if not the Nifty, then where else should we look? Do you see any emerging trends? I mean, let's start with the market's favorite trend over the last 1.5, 2 months, which is consumer and auto. Do they look good for more?
Well, firstly, Surabhi, I think over the last 5 years, we've seen a lot of market cap rotation. So when the Nifty does not do well, people are a little discouraged that, markets are not running up the way they used to, but then they can't keep running up given our levels and given our valuations. So I think the large caps have taken a bit of a backseat. I mean, just a case in point, what Bajaj Finance has done versus Asian Paints. I think that's just the writing on the wall that if you are in the right pocket, there is clearly outperformance. So I think given that, there are some new leaders which have really emerged in the recent past, auto being one of them. In fact, I spoke about it in our last interaction. The auto index, as we speak, is near lifetime highs. And I think the news flow around GST has clearly been the trigger for the same, which I'm not surprised at all. It's a big one. And I think it's going to see much bigger upside. So I think 27,700 was our working target. We got close to it. But I think over the medium term, you could even see a 30,000 on the auto index because standalone stock setups continue to look positive. On the other hand, people thought that FMCG will start doing well because of the GST trigger and all of that. That's not worked. FMCG has been one of the biggest underperformers of the last 3 weeks. And in my book, it is still an avoid. So stick to auto, stick to metal, stick to banking. Those three are our top picks.
Okay, all right. Hi, Gautam. Good to see you. Let's take a break from the equity markets. What about gold? Where is that one headed? $3,800. Wow, what a move out there. Where is that headed?
Well, it's left everyone behind and every asset class behind, isn't it? In the last 18 months, I remember I was at a CMT summit a year and a half back, and it was at 1,800, and all global strategists were discussing whether S&P or gold. Clearly, gold has won, and I think it's going to keep winning. I think 3,850 is an important near-term resistance. I don't think these are levels to buy, but this is a structural mega trend which is going to continue over the next 3 to 6 months. So if somebody is long from lower levels, please stay invested. But more than gold, as I've said in all my recent interactions, I think the bigger opportunity is silver. As we speak, we are at $44 international prices, and I think there is another 20% upside very easily towards $50 and beyond. So stay invested. I don't think there is a case to book profits in precious metals and move to equities.
Gautam, that's an important point. Those who are already invested, it's like one of those stocks which has gone from 100 to 1,000. And it's still looking good, but then how do you buy it? $1,000 now, right? Even though the structure, etc., looks good. I have a friend who keeps talking about gold, right? Has been talking about gold for a while. But yeah, it's one of those things, Gautam. I mean, I think we've spoken about. We've been talking for at least 15 years now. Global financial crisis, currency debasement, and how gold is this new thing. But nothing happened. $1,000 in 2008, but then it suddenly moves, right? 1,000 to 2,000. It took 12 years, and from 2020, it's almost doubled in 5 years. It's like any other asset class. You can never time it, although the drivers were there even back then. Sorry, go on.
Well, you don't tell a technical analyst you can't time it
Ah.
all the time. And I think what happened over 7 years, I think, is the hard work that gold put in, in that period, where everything was in place in terms of fundamentals for it to do well. And the kind of geopolitical environment that we live in now, it's very easy to actually build a case for gold. And the industrial use argument for silver, I think, is really big. So while gold has done very well over the last 18 months, I think the next 12 to 18 months will still belong to silver.
Yeah, that's an interesting one. वो नहीं लिया तो silver में chance है, right? I mean, I think let's see. But point taken, Gautam.
But I was looking at some sobering stats, and everybody does this, right? India versus the rest of the world. So if you look at India versus the MSCI All World Index, and I'm just checking my numbers again, year to date, we're down 16%, which is fine. I mean, you can't be outperforming every year, but the bigger worry is that in dollar terms, we have underperformed that index by 37 percentage points. So, there is that question of, what next? And I think a lot of investors here are very savvy now, Gautam. So therefore, they're wondering silver or gold, and they're wondering whether buy this dip on the NASDAQ or, go and buy, China stocks because you have a bigger tech play over there. So let's broaden the conversation. The US market itself, do you see it continuing its winning ways? The Fed chief thinks it's overvalued, but what are the charts saying?
There was so much debate in the US markets about debt and inflation and Trump's policies, valuations, and whether AI has been discounted to a greater extent. And a lot of people stayed out thinking that this is a bubble, this cannot sustain. But the US markets have done fabulously well. And we've been tracking it very closely over the last 6 to 8 months since we now have a product. And I'm amazed to see the kind of moves that US markets are seeing. There are still no signs of topping out. My working target on the S&P 500 is 6960. I think the NASDAQ can do another 10-12%. And many of the top stocks are still very well placed. So if the mother market is still in a strong bull market, and many other markets in Asia and Europe are still trading at lifetime highs and doing well, I mean, the case which I made last time, India will have to join the party. The world will not join India's underperformance. India will have to join the world equity market, bull market, which is playing out. But the key point is, India versus the world. Yes, we've underperformed, but from a Nifty perspective. But if you are in the right stocks, in the mid caps, in the small caps, I mean, look at an Eternal, just a case in point. It's at 335 today. I mean, what an incredible run that stock has seen. There are many such big winners which are in the making right now. So I don't think the top 100 is going to do anything in the next 6 to 12 months. So the Nifty might not give great returns, but the mid cap, small cap, because the domestic money is actually now going seriously there, I think is where the real opportunity is.
No, absolutely. I couldn't, agree with you more and take your point. And why mid cap, small cap? You gave the example of one large cap, Eternal. Look at a stock like Maruti. Like, who doesn't know Maruti, right? And that stock is up 50%. So if you're in the right stock, then it's a very different market for you. So give us some more clues, some names. I don't know, you don't usually talk stocks, but some idea where the structures are looking, really promising at this point in time. Maybe some individual names or some hints around sectors, if not stocks.
See, I think last time I spoke about auto, that's already played out. I think the top stocks have done very well. I don't think they're a buy at current prices, but I still feel that metals is the next big opportunity. I do know a lot of my fundamental friends who are not able to join the dots and build a fundamental case for metals. But look at what top metal stocks have done. JSW Steel, Hindalco, Tata Steel, SAIL, Nalco. Not recommendation, but I think some of these stocks are trading near lifetime highs and still very strong on the charts. So from somewhere around 10,000, which is where the NSE Metals Index is, I wouldn't be surprised if you get a 25% move on that index. So I think metals is really the next big opportunity, which I've maintained for a while, and I think that's going to continue. Banking, I think, is going to do well and possibly start moving towards levels of 57,500, led by the PSU banks. I think I love the setup of some of the top PSU banks, and I think they are likely to be big winners. And the dark horse sector, which not many people are talking about right now, is the comeback of PSU stocks. They were in a mega trend, went into a consolidation for a year. Everybody gave up on it. Valuations are comfortable, nothing to do with foreign policy. And I think they are under-owned in some sense. So I think PSU could also be the next big opportunity over the next 1 year.
PSU as in only the PSU banks, or overall you expect the CPSE universe to start firing up?
I think PSU banks will outperform for sure within the entire PSE basket, but the entire PSE basket is also likely to do well. So if somebody wants to just look at an ETF and just participate on the index, it might be a good idea.
Yeah, no, it's taken a nice break, right? Last couple of years, the PSU Bank Index. By the way, you mentioned steel, Gautam, right? And you're talking charts and price action. We have the fundamental view coming in on steel in just a bit from now. So we have the Steel Secretary, Government of India, joining us shortly, Mr. Poundrick will be able to sort of explain to us where the government sees, because it's an industry with a lot of government focus. It's a fundamental building blocks industry, and I think it's a conversation you don't want to miss. Coming up in just a bit from now. Anything else, Gautam, before we wrap up? Any other single stock ideas?
No, I think the point is stay concentrated. I mean, don't do too much. I think that's really the key takeaway, because we've seen what's happened with IT, we've seen what's happened with FMCG and pharma, capital goods, all underperforming. Don't commit where there is no relative strength. I think that's the key takeaway. Stay where there is a quality strength and reasonable valuations, and I think we should be good.
All right, we'll leave it there. Gautam, thank you very much for joining us. Really appreciate your time here on CNBC TV18. And look forward to the next one.